Talk to us, though, about break-evens. Do you think that inflation expectations should be higher here, given what we're seeing in the energy market?
Yeah, I think it should. And, the break-even rate for the 10-year, amazingly, is rather stable between 2 and 2.3% today, I think around 2.34%. And so that's the expectation for inflation. I would say it's more like 3. Getting down to 2 is going to be very difficult going forward. And so, that to me means that nominal treasuries, take the 10-year again, at 4.75 or 4.8, that nominal treasuries are basically based upon an expectation for a 3% Fed funds rate over a long-term basis. There is a equity risk premium that you talked about. There is a term premium for bonds as well of about 1 to 1.25%, because that's the risk of owning a 10-year versus a Treasury bill. And so if Fed funds settle around 3 to 3.5%, a 5% 10-year Treasury is decent value. It's not great value.
What is great value, though? When you think about 5% on a 10-year Treasury, we haven't seen that for 15 years plus. If that's not great, what is great?
Well, it's greater. There's no doubt about that. But 5%, again, would be a normal bond term premium of about 1.25% under 3% inflationary expectations. So that's okay. And I know corporate spreads have widened out a little bit, and that makes them attractive. But what I think has happened, Katie, in the past several weeks, and the market is beginning to recognize Treasury supply, based upon a $2 trillion deficit. They're beginning to recognize, basically the selling of bonds by the Fed in terms of the QT. They're beginning to recognize higher for longer as well. And so those two factors have been important in terms of the current rise. What I've seen in the last week is that the bond vigilantes, to the extent that they are now individuals owning, billions and billions, hundreds of billions of bond ETFs, they've been spooked over the last week or so by declines of 2, 3, 4, 5% in their ETFs. And so I think they're joining the crowd in terms of selling. And, we're seeing a little bit of an oversold market here headed to 5%.